So we're looking at another giant recall by the car maker Toyota.
You're absolutely right there, Laura. The Japanese car maker has suffered another recall blow. It wants 6.4 million vehicles to return to the shop to fix a variety of problems. Toyota says that no injuries or crashes have been linked to these issues, but the recall comes at a time when the car maker is under pressure to show that its safety routines have improved. Delano D'Souza has more details.
It's the second largest recall in Toyota's history. On Wednesday, the world's largest automaker recalled 6.4 million vehicles, citing 5 defects, ranging from faulty steering to seats. Toyota says it's not aware of any crashes or injuries caused by glitches found in 27 of its models, including the RAV4 and Yaris. The recall affects over 2 million drivers in North America alone, followed by Japan, Europe and other regions. The latest recall announcement is the largest for the company in a single day since October 2012. Back then, the company called back 7.4 million cars, including the Corolla and Yaris, due to a fault in their power windows. In March, it agreed to pay the US government $1.2 billion for withholding information related to those defects. Toyota's latest recall comes when automakers are under increasing scrutiny in the United States over how quickly they take preventive action. Toyota rival General Motors is currently under investigation in the US for failing to act on a known defect linked to at least a dozen deaths. For now, Toyota has not said how much the recalls would cost. The company isn't yet sure if the 5 faults it's identified stem from Toyota suppliers or its manufacturing process.
We're going to take a look at the stock markets next. American stocks, they're trading higher after the Federal Reserve released the minutes of its latest rate-setting meeting. Fed officials said in those minutes that interest rates may stay lower for longer to support the U.S. economy looking ahead. And investors, they seem to like that message because we have seen a pop in shares over on Wall Street. The Nasdaq, for instance, is up 1.3% this hour with around about 42 minutes still to go on the clock over there in the United States when it comes to trading. Better than expected results from aluminium maker Alcoa are also seen to be helping stateside. Now, European shares, they were also higher at the close, inspired by those Alcoa earnings. The CAC 40, for instance, ticked higher by 0.4%. The Frankfurt DAX up almost 0.2%. Now, Greece is about to pass a milestone in its economic recovery. The Greek government says it's planning an historic sale of 5-year bonds. It's been 4 years since Greece last ventured into international bond markets to raise money. Since then, the country has had to rely on 2 bailout programs from the European Union and the International Monetary Fund. The government is seen to be tapping into growing optimism that Greece is turning a corner after 6 years of contraction, and the bond sale is expected to raise around 2 billion euros. At the same time, many Greeks complain that they are not seeing any signs of improvement. Unions staged a nationwide strike on Wednesday. Protesters took to the streets against austerity and a jobless rate close to 28%. And when it comes to the bond sale, opinions are divided on whether it'll help.
I hope it's for the best, but the way things are now, everything is very difficult.
It means a great deal because it means that the cost of borrowing will be reduced, and going forward we'll be able to function within the Eurozone just like any other country.
Let's bring you through a few other stories that we're keeping an eye on. The European Commission wants to introduce new rules on how top executives are paid. It's unveiled a draft law that would give shareholders a greater say on pay rises for bosses. EU Commissioner Michel Barnier says he wants a tighter link between salaries and a firm's performance. He says he's acting after some excessive pay packages had left a bitter aftertaste. Luxury group LVMH has reported an unexpected drop in wine and spirit sales in the first quarter. The company owns brands like Hennessy Cognac, which has seen sales take a hit during a crackdown on lavish spending in China. At the same time, LVMH says that its flagship Louis Vuitton fashion brand had an excellent start to the year. Overall, first quarter sales grew 6% to 7.2 billion euros, slightly above expectations. And Russia's President Vladimir Putin has told Gazprom to hold off on making Ukraine pay for its gas supplies up front. Speaking in Moscow, Vladimir Putin said the state-owned gas supplier should seek negotiations with the European Union first. The idea of upfront payments was floated after Gazprom said Ukraine's bill for previous gas supplies stands at $2.2 billion. Okay, that is the business news for now. I'll be back in around about an hour's time with more business headlines. Back to you, Laura.
Thanks very much, Marcus Carlson. Well, it's time to find out what's got people clicking and sharing and liking over the past 24 hours. It's time for our daily dose of web news.